Welcome to the episode 11 of the coin flip trading, a trading strategy based on nothing but a coin flip. You get heads, you buy, you get tails, you sell. It's that simple, and we trade based on that. So this is actually the 11th episode. This is actually like the volume 2 of the coin flip, let's call it like that. But anyways, the topic for today is something called margin call. And people trading probably heard about this, and how does it actually apply to our strategy? First of all, by definition, a margin call is pretty much when it happens when the margin account, of course, when we are trading CFDs. So the margin account, when it falls and the value of the account actually falls below the required amount of your broker. In that case, you get a margin call. That means that you get two options. And those options are here and are required by the broker. So you can either deposit more money to the account and you can actually keep on trading the way you did before, or simply sell some of the things that you have positions on. So sell some of your open positions. And margin calls, of course, occurs when something, some assets or whatever you own in that account, and it happens when the value of something actually decreases. So you know that something is bad. It's not a good thing when you get a margin call, of course. But how does it actually apply to our strategy? What does it have to do with the coin flip? I would say that it has no real meaning to us since we always set our stop loss and take profit. So it can happen that the account or the value of the open position is going to decrease so dramatically that it's going to be required for us to invest or deposit more money. This is just not going to happen. That's why we can pretty much ignore the margin call when it comes to this exact and specific strategy, because it will probably not happen. It should never happen when you trade exactly the way we trade here. Okay, so we have that out of the way. This is a question I could have thought of, and people could also have the same question, but let's finally get to the trading. So let's open up the broker account, and for today, I'm gonna choose the GBP USD Forex pair. We moved on to Forex because it's a little bit less predictable. When you trade indices, it has the tendency to go up. So when you get tails, it's not really like Forex. Let's just stick with the Forex pairs. But anyways, as you can probably see, it means that we have, of course, based on the coin flip, it tells us that we have to buy, we get heads. So that means that we click on the green button. We also have to set everything up. Of course, we take a look at the ATR. For more information on that, just take a look at the previous videos where I talk about each specific topic that applies to our strategy. So I try to explain everything throughout the videos. So we set everything up. We set up the take profit, the stop loss. And at this point, we just need to wait and see what's really going to happen. And this is the great thing about it. You do not care about anything. You just take a look at the notification a couple of hours, minutes, or even days later. So I will, of course, update you once we get the result. And as you can see, this trade ended up to be a negative trade. So that means that we lost money with that one. And when we take a look at the account, it means that we are still negative. Based on the 10 previous trades, after those we were pretty much break even, but right now we are in the red, we are negative. But keep in mind, and I did explain this earlier, we always take a look at the bigger picture. For example, I get the next 3 or even 2 trades, and those trades are going to be negative. That doesn't mean that I just stop trading. I know that based on the probability, the next trades after those negative ones will probably be successful and I will make more money with those. So we just have to make we have to make summaries after a period of trades, after a longer period of time. So that's why we do this. Of course, I'm trading with fake money just so we don't risk anything. And of course, just like all the time and all of the disclaimers, this is not an investing advice or a trading advice, and you should just watch it for entertainment purposes only and to see what really works and how stuff actually works for me when it comes to this strategy. But anyways, thanks a lot for watching and your support, and see you guys later in the next video. Peace out, guys.